Hello friends, very good evening. Myself Bala here. I welcome you all to my YouTube channel, Talent Traders. Those who are new to my YouTube channel, kindly subscribe my YouTube channel to get more update on intraday and positional trading strategy. In this video, I am going to discuss about the Bank Nifty option trading, and you are seeing the Bank Nifty chart of daily basis. So someone asked about the colors of candle. Green is up, here blue is up, and black is down, and your chart red is down. So I adapted this colors is okay for me, and if you want to change it, the red is for red, the black is for red, and blue is for green, right? So today market is slightly open above previous day high as well as previous day close, right? So what the condition where the Bank Nifty is happened today, it is opened above previous day high. This is what a previous day high, and Bank Nifty open above previous day high, and also it is opened above previous day close. That means previous day above it is close. And what happened after opening higher level, it's finally it is fallen down and closed nearby the previous day high or nearby the previous day close. What about this concept? We have already a scanner. The stock opened above previous day high or previous day above close. We have already a scan. That means we have used the scanner by the stock is opened above previous day high and it is fallen down. That is what our expected thing. And if you see today's Bank Nifty, it must open above previous day high in the first 15 minutes, but it never breaks the previous day high. Then it should fallen down. Let me check it out on the 15 minutes time frame. I will just open the 15 minutes time frame. You see, can you see that? I'm using a 15 minutes candle where the Bank Nifty is started above the previous day high, but while it makes the 15 minutes high, till end of the day there is no chances to break the 15 minutes high. So if such a kind of thing is happen in the market, we will focus for a selling opportunity, because market is started above the previous day high or previous day close. It is trying to fall down on the next day if it is opening above previous day high or low. So that is the key concept we already explained on open above previous day high or open below previous day low. Let's see, when market is started in the 15 minutes range around 34,000 to 34,200, the open high, and initially it broken down and it made a low of 34,800. Again it tested the same level of 34,000. Again it's coming down to 34,800. Almost 200 points it is down from the first 15 minutes open low, right? Here I'm not going to discuss about how many points the Bank Nifty is going down from the top, or how many points the Bank Nifty is down from the open ORB breakout, right? The ORB breakout, whatever the time frame you are taken. So I am taking the 15 minutes ORB breakout. So after that ORB breakout, it never trigger your stop loss. It may break on your sell entry point, and never it is broken your stop loss. Maybe you are holding the position. But what I am going to discuss in this video, how about the time value? So many of them are asking about what is time value, and so you are all my student who are attending my premium class, that is what option buying strategies, but we are using in a stock option. But index options, you have some questions about how we can do on index option. So index option having highly volatile and also highly liquid. So more people who are doing trading on index options. You hope you understand. most of the trading volume which is happening in Nifty and Bank Nifty, if you compare Nifty and Bank Nifty is having higher volume. That means more people who are doing a trade in Bank Nifty, but they don't know what is time value. The main concept of this video is about time value. So today Bank Nifty, you know, after the market is opened, another 15 minutes later, because the first 15 minutes should be the highest movement range. Most of the time the market is settled in the first 15 minutes range. But if after the first 15 minutes range, either it's a lower side or higher side, if the market is broken, there is a movement on that side only. Let's say simple, when the Bank Nifty is started by 34,000 and it fallen down to 33,800, so almost 200 point down. But today if you see Bank Nifty, it is 195 points, it is up. But after market opening, exact scenario for the day is 200 point negative. But if you see from previous close, if you are watching that Bank Nifty from previous close, that's looking almost 200 point positive. Can you see the Bank Nifty is started by, from the previous day close, it is about 195 point positive. That is a net change from yesterday's close and today's close. But if you compare today's open, right, and today's close, it is comparatively almost 400 point down. How? Can you able to see? Today market is started somewhere around, just a second. Today market is closed the Bank Nifty while I am showing the future contract. It is started by 34,180 and compared to the previous close, 644 is the previous close. Almost more than 500 point positive in the Bank Nifty by opening. But end of the day, Bank Nifty closed is 33,850. 33,850. So 150 almost. There is a close by the opening is around 300 point down. Can you able to understand this point? By the opening, Bank Nifty is started by 500 point positive. By the closing, Bank Nifty is around 195 point positive. Can you see that? Compared to previous close of 30,476. From this point, if you see that a Bank Nifty is 200 point up, but from this opening, Bank Nifty is down by 300 point. So this is what the key concept worked based on the time value lapse. Did you see how many time value is going down today? Is there anyone having idea how much of the premium is loops today in the particular Bank Nifty? How many premium is going down? Is there anyone? Anyone to know about how many premium is going down? So that is the key concept. Most of the biggest player who are making money in based on the time value. But we are not focusing on the time value, but most of them are making based on the time value premium. Let I show you that. Will I show you what was the today's Bank Nifty? Whatever previous close, I don't want to check about previous close. I just about let's take it out on live market. Around 9:30, what would be the Bank Nifty closing price? Around 9:40. If it is checking out the spot price, it is less than the future price. But I am taking that study spot price. The spot price of Bank Nifty is 34,026. Hope you understand. The Bank Nifty is started by 34,160. Sorry, 26. And end of the day, where the Bank Nifty is closed by 33,850. Do you see that? Closing. at 3 o'clock 30 minutes 33,850. If I do a bank nifty future trade, let assume I plan for a trade in futures. Let assume round number of 34,000. It closed by 33,850. Should be 150 point loss if I buy it. If I bought it, so I may be losing 150 points. It's near about 3,750 or 3,500 rupees. You got it? Yes. But if I sold it, if I bought it, I lost 150. If I sold it, I made 150 point profit. That comes around 3,750, whatever, 3,500, 3,000. But after market, anyone can tell you this direction market is goes up or goes down. But on a live market, no one can able to say which direction the market is moving on. Even I can also can't able to tell which direction the market is going up or down. But at that particular time, we can decide some strategies. We have to decide the market is going up or down. First, we can roughly decide. I'm not going to exactly decide of the trend. I can roughly decide whether it is going up or going down. I decide whether it is going up or down if I am playing with the options. If I am going to sell options, if I am going to sell ATM option, that is also loses its premium. If I am going to sell a OTM option, that is also goes losing premium. If I am going to sell a ITM options, that is also going to lose its premium. So you have to understand, this is the main key point. The options loses its premium 100% sure, right? So that I am going to explain. Almost the video is going about 12 minutes, but the concept is right now we are going to discuss. Because while I'm playing whether a buying trade or a selling trade, if I am doing a buying trade, I may be losing at 150 point. If I am doing a selling trade, I may be doing a 150 points profit. But as a neutral trade, should I make money? Yes, because of the time value decay. So most of the people doesn't know what is the time value decay. Let us show how the time value is decay today. How many points or how much of the amount which is the time value as happening today. Let us show. So instead of showing the charts and other thing, it's taken a time. I have created some scanners which are going to take my trade. This is a scanner which is going to place order on behalf of me. So I did some three kind of strategies, three strike prices which I'm taken. So ATM and 500 above OTM and ITM and OTM, and same like that 500 points below ITM and OTM. This is my concept. If I done it, so you can understand what is that ATM premium loses. So let us see, market down by 200 point today, but the ATM premium 271 and 378, almost 106 rupees is the time value lapse in the ATM options. So if you sold the option, you may be chances of getting profit of 106 rupees without finding a direction of that particular index, because huge volume happening on the bank nifty and nifty. So I am talking about the example of bank nifty. You have huge premium drop, even the 150 points down in a bank nifty, you are making 106 rupees as a profit. If I am talking about 500 point positive thing, that means I am taking about 500 point ITM and also OTM. This 112 rupees, I know it is 100% zero value because of the time value. This is trading 112 rupees. And this premium compared to this time, it is 500 rupees. But it was trading 619, almost 120 rupees nearby, it is higher than that, it is premium, almost 112 rupees. So nearby we have 230 rupees higher than that, it's premium. That is what 230 rupees should be time value for that call and put strike prices of above 500 rupees. And same like that, you can see, and 500 points down strike prices. This was 605. So 105 rupees higher than its premium while compared to 33,900. And this is almost 150 points. So here 255 points is the time value. Here ATM options 350, 290, whatever the thing, almost 640 plus 150, again another 150. So 940 rupees multiplied by 25 because of the lot size. 940 into 25, 23,500 rupees would be the time value of this premiums. And we sold nearby how much? 292. Let I show you how you are going to understand that premium values. 292 plus 350 plus 112 plus 619 plus 605 plus 150. So almost 2128 is the total premium. But what is the exact premium for the trade? At the time while I am taking the entry, upside 1000, upside 500, downside 500. Total premium is 1000. That is a real value or intrinsic value of the in the money option. So remaining all are ATM and OTM. There is no value. But the total premium 2128. So we are taking the 1120 point as time value. Only the premium is 1000 rupees approximately. Even market moves up and down, the premium may changes. But while if you are a buyer of the options, all these options, the worth of 1000 rupees material, you are going to buy 2100 rupees. Would it good for a buy? Or there is a material worth is around 1000 rupees. You are selling that one is 2120. It is worth for a sell. That you have to decide whether this one is worthy for a sell or worthy for a buy. So even in the weekly premium, we have a lot of time value effect. So you can try to do it. So there is opportunity to make some huge benefit on time value labs. But we need high margin to do it. But it is like regular and consistent. Think about it. If you have any doubt or questions, you can comment on the comment box. Thank you for watching this video. And thank you so much for your watching this. And if you are not yet subscribed my YouTube channel, subscribe the channel to get more updates. Thank you so much. Thanks for watching.